Hey, everybody. Welcome to the New York Media Meetup. So we're going to do a couple of intros and also just, give you the lay of the land as folks start to trickle in here. So if you are looking for the panel on Silicon Valley Bank, you are in the right place. I am joined here by our fantastic panelists, Alex, Kia, and Natasha. But before we get into the discussion in earnest, I want to just go over a few quick items. So first, I know there will probably be a lot of questions for our panelists. We will get to as many as we possibly can, but just if you can, please input those via the sort of handy Q&A feature that you should have embedded in the Zoom, and we will make sure that we get to those. Second, want to just briefly introduce myself and the meetup for those of you who haven't maybe been to one of these before. So I am JJ Colao. I run a PR firm called Haymaker Group based out of New York City, here in New York. We work with, I would say, some of the best tech companies on the planet, including folks like HubSpot and Gympass and SoftBank Robotics and G2 and many others. And my only plug for this whole hour will be, if you are an awesome PR professional, please shoot us a note. We're always looking to speak with folks who might be interested in joining our team. And then quickly, by way of background, I began my sort of media career as a reporter at Forbes, where I covered startups and venture capital and technology, worked with Alex some late nights closing the magazine, and then about 8 or 9 years ago, left to start a PR firm. So also started the meetup kind of around the same time, back in 2014. And if you are interested in some of these topics around kind of, as we say, the business or the craft of journalism, we hope you'll come back. We do these about every quarter, a little bit more frequently. So if you have any ideas for what you'd like to see us cover, we're certainly open to those as well. Okay, so that is enough for an intro. So why don't we just get into the panelists? So first, we have Alex Konrad, who is a senior editor at Forbes, where he covers venture capital, cloud, and enterprise software. Alex also runs the Midas list, the Cloud 100 list, and the 30 under 30 for venture capital. Alex, you've been at Forbes for about 10 years, so time flies. And then previously you had stints or roles reporting at Fortune and WNYC. Alex is based out of New York City, not too far from me. So great to have you, Alex. Next, we have Kia Kokalitcheva, who's a technology reporter at Axios, where she covers tech, Silicon Valley, and venture capital. Kia writes the Saturday edition of the Pro Rata newsletter, which is fantastic. Highly recommend that you all sign up for it. Previous roles at Fortune and VentureBeat, and Kia is based out of the Bay Area, which makes sense as a tech reporter. And last, we have Natasha Mascarenhas from TechCrunch, a senior reporter at TechCrunch. And Natasha covers early stage startups and venture capital trends there. Also co-hosts the Equity podcast, writes the Startups Weekly newsletter, and previously held roles at Crunchbase, Boston Globe, and the SF Chronicle, also based out of the Bay Area, where I'm sure it is sunny and beautiful as it is here in New York today for once. So we're not here to talk about the weather. We're here to talk about Silicon Valley Bank. So I want to start off maybe a little bit differently than what I sort of plugged in our email. And I want to kind of give folks context around Silicon Valley Bank as an institution and what your understanding of them was and what your interactions with them were like prior to, let's say March 8th or even, a couple months prior to that. And then we can kind of get into the TikTok of how everything went down in early to mid-March. So Alex, if you don't mind, we're going to start with you, if that's okay.
Okay. So how did I think of Silicon Valley Bank? I would say I thought of them as a great sponsor of free drinks and podcasts, and was really disappointed personally not to ever have them sponsor a big event or podcast that I did. But seriously, like a week before everything went down, the former CEO spoke at Upfront Summit. I think we were all there. And I was kind of laughing that I felt like Kate Clark at The Information, who we all know well as well, kind of, maybe drew the short end of the stick to be doing a boring sponsor interview on stage. Little did we know that was actually probably the best interview of the whole week. So, I mean, they were just omnipresent as a supporter of the startup ecosystem, whether it was events, as I'm kind of joking around about, but also importantly, emerging fund managers, underrepresented founders. I feel like they were kind of the services group that was always around in the ecosystem, always had 5 people at events. And so that was kind of how I thought of them. And of course, I've had to think about them a lot more since.
Yeah, you certainly have. Kia, Natasha, anything to add to that? I know, like Silicon Valley Bank has kind of been in the background forever and has always, to me, seemed very stable and a little bit boring, maybe to Alex's point. But I'm curious if there's anything else that we should maybe add for folks just to give them, context around their role in the ecosystem.
Yeah, I mean, I very much looked at them as a good way to get market research. Like they did some really interesting data, data maps and data surveys. And because they were so ingrained in the system, it felt like one of those surveys that actually told you something about how startups were thinking. So that was like probably my only other, beyond what Alex said, way that I was thinking of it. But yeah, I'm still mad that I skipped their panel at Upfront to network. I feel like that was like the biggest regret. And I asked Upfront to send me the video, but stay tuned on if they're publishing it. So yeah, I don't know. It was kind of like such an icon that you don't even take it seriously, or at least listen to everything coming out. What about you?
What's ironic is that they literally just sent out like their highlights from the summit, and there's not a mention of Greg. Literally not a mention. The video is not gonna go up, but I have an audio recording of it.
Hard.
And I published excerpts when I was going down, so I kind of won out on that one. But one of the things to me that was always kind of interesting is that like we all knew them as like a bank, right? Like I remember when Brex was coming up, people were like, oh, startups are switching their banking from SVB or Chase or whatever they're using to Brex to whatever, like try it out. But I always like somehow had run into different businesses that they had. Like I remember she's not there anymore, but I used to know a woman who was running one of the VC portfolios out of the LP business. And I had a really funny encounter with her right after Alex's big cover on Andreessen becoming an RIA, because she had access to all the returns. So like I knew that aspect of the business. I also like had made friends with a guy who used to work in the New York office. And so he had told me about a lot of like the venture lending that they did in the background, that like, you see all these like funding announcements where companies are like, oh, we raised like $20 million in equity, but there's weirdly a lot of like small like venture loans in the background that we like nobody ever talked about, but they did all the time. And then I even have like a friend who was working in like more like the LP services outreach stuff around like diversity and stuff. So like I feel like over the years I've gotten to sort of interact with a bunch of different pieces of the entire I guess SVB financial group is the official title. But yeah, they were just like, as you guys both said, like just part of the fabric of the industry, and just always in the background, always had people at the conferences. So yeah,
Yeah, there was always somebody with a name tag that said Silicon Valley Bank, like just everywhere. And maybe not always the most popular person like at the event, but like ubiquitous.
But they were good people. I
Totally.
don't want to come off like snarky there. Like there were some really nice people who are still figuring out what they're doing, who were working there. It was just like, yeah, they were so ingrained that we almost forgot about them in a way.
There's one at a conference I went to last week. There was an SVB person and they got a shout out on stage and people clapped for him just showing up to the conference. So I feel like they're also coming back, which is probably something we'll talk about too today.
Definitely. And I think, Kia, you did a great job of describing kind of what they did beyond staid, commercial banking, and in terms of having interest and involvement in a lot of different venture funds, and also in terms of providing, some of that venture debt and being more than just somewhere that startups put their money or venture capital firms put their money. They offered a lot more that kind of made them even more entrenched in kind of the venture and startup community. So with that, I want to let's get right into March. And maybe what I want to start with is, when did you first have inklings that what happened was even a possibility? I know there was kind of a Twitter thread back at the end of 2022. I know there was some noise even when he was at the Upfront Summit, but not nearly, I think, as dire as it became a week later. So I'd love to just hear how this came onto your radar, and then maybe even walk us through kind of that Wednesday through Sunday or Monday, or maybe it's more of a week-long period, because I think that timeline is really interesting. And my understanding is that a lot of you had incredibly busy, maybe sleepless weeks and maybe even more than that. So I'd love to make sure we kind of get that foundation. And Natasha, if it's okay, we'll start with you.
Yeah. So I actually started paying attention to it on Thursday. So the day after they had kind of issued their own guidance on what they were changing about the way they were structured. But I had a couple VCs just jump into my DMs. One literally just, said maybe hours before we actually had a story out about people advising their portfolio companies to move their money out, just being like, is there a bank run happening? And I feel like I actually went into a podcast right after, or right as I got that DM. So I kind of made a joke about it in the beginning of the podcast on equity. I was like, yeah, something's happening at SVB. We'll talk about it later, but let's get into what's actually important this week. And I'm like, it's a piece of history now in retrospect. But I mean, that really was the tone, I think, for the entire week, which was a lot of the people I've spoken to throughout my past 4 years in the beat were just DMing me, asking me for answers to questions on where to move money. Weeks before that, I had heard some whispers around people being more frustrated than ever with SVB, or just people advising people to move or diversify, but never at the scale that it was. So it did feel a lot like, at least my sources were coming to me, maybe even days or hours after they had heard of some of the bigger funds doing it. I mostly talked to early stage emerging fund managers. And so that was my first inkling on the story.
And Natasha, that was Thursday the 9th?
Yes, if I'm getting my timeline correct. Thursday the 9th was kind of it was the first, that was when I first was able to see actual written proof that VC firms were advising portfolio companies to move out of SVB. And then obviously after that, there was kind of the infamous all hands that Greg held with clients telling them, things won't go wrong unless, and then I think just things spiraled from there where people were trying things out.
I mean, less than 24 hours later, it's pretty crazy how quickly it happened and unraveled. Alex, how about you?
Yeah, there's a scene at the end of Animal House, the old classic film, where Kevin Bacon, in one of his very first roles, is in uniform as a ROTC cadet or whatever, and he's shouting, "Remain calm, all is well," and he gets trampled. Of course, it's funny in that context. I think when the former CEO of SVB did his own version of "Remain calm, all is well," that's when we really started to pay close attention. But I think that honestly, I was a little slow to jump on the story, because if I reflect on it, one thing that we grapple with is trying not to get too inside baseball. And so there's gossip and there's stuff that people are talking about that we just aren't confident that the general business audience cares about or needs to know about. So if I have a VC messaging me on Signal, hey, people are starting to pull their funds out, if that had been the extent of the story, that was maybe not a story that we would have gone crazy on. But I think once things started to pick up momentum on Thursday, I definitely kind of had this, oh gosh, moment where I knew it was going to suddenly take over my life. But kind of up until Thursday and that moment, I had been hoping, I was surely these VCs aren't going to start a bank run and create a self-fulfilling prophecy here and create a bigger problem than there needs to be. Like, surely there are rational heads in the room, but obviously that was wishful thinking.
So for you, it was basically making sure that this met the threshold of, going beyond just a kind of inside baseball industry story. A couple of people are pulling money out, et cetera, and became something of national import. And that wasn't really clear until Thursday, it seems like.
Rightly or wrongly, at Forbes, we didn't think the bank could seriously fail until like Thursday afternoon. And at that point, we were like, gosh, that will reach a mainstream audience. But yeah, if it had just been, these three firms were trying to drive a bank run unsuccessfully, that would have probably been a little inside baseball for us. Yeah.
Yeah. How about you?
It's funny, like I looked it up before jumping into this panel. So the funny thing is, like, going back to that upfront interview, I remember watching it, and Kate Clark was asking all these questions, bringing up this like Financial Times article that I had not seen before. I hadn't even seen that insider article from December about like Green Oaks kind of quietly telling all their portfolio companies to do that. I completely missed all of that. And like the upfront interview, it was like interesting. And I was like, okay, they have this like bond problem. But it like he downplayed it so much that I figured like, okay, whatever, like it's not a big deal. And then I remember like Wednesday, they at after market close, they put out their like whole we're gonna raise like $2.5 billion or whatever it was, and blah blah. And that was right after the Signature Bank like stuff was going on. Or no, not Signature, Silvergate. And one of my colleagues on Slack was like, speaking of banks in trouble, and like posted like their press release from SVB. And the next morning, Dan Primack, my colleague on Slack, is like, I'm going to do the, the fundraise as, the one of the main things in a newsletter. And then I'm jumping on a plane to go to South by. So I'm like, oh yeah, like whatever. And then things like within hours, there was like the CEO call telling people to stay calm. And then you're starting to see all the reports from the VC firms. And for us, like our threshold, not that it's lower like in terms of quality, but already for like all the reporters like myself and Dan and the whole business team, like this is already agitating, and we started to cover it. But again, like the idea that the bank would be taken over by the feds the next morning, even by then we had written multiple stories. But I think the next morning when we woke up to that, it was still shocking. Like nobody thought the bank would fail. Like we thought it was going to be drama for like a few days, and then that's kind of it. But like, yeah, it was pretty it was like slow, and then picked up, and then reached another level on Friday morning. Yeah, it was. Yeah, I still can't believe SVB like failed. Like I don't know. It's been over a month, and I can't register.
It's pretty interesting hearing from all three of you how quickly it seemed to happen. Basically woke up Thursday. This was a thing that folks were kind of broadly aware of, but did not seem like it was going to dominate your day or, week for that matter, or weekend. And then all of a sudden, 24 hours later, it was gone. I'm curious if you all are pretty tuned in terms of social media currents and eddies and founder and VC chats, and what various sources are saying throughout the day, what various groups are saying throughout the day. Did you have a sense of how or why all of this was accelerating so quickly that day? I'm just interested in like any perception of the human dynamic, over those 24 hours and how everything happened so quickly and suddenly. So I don't know who to start with, but if anybody would love to start, we can go to you.
I'm happy to start. I think it was Twitter. I think that's what made the difference and what made it feel like it was happening so fast, because a lot of people, if they weren't getting a message from their group chats or from the communities they were part of, were like refreshing Twitter as much as they could to get information. And so when I was talking to competitors, or I was talking to founders in my network, I think they were all just kind of saying that it was by the virtue of being online, honestly, that they felt like things were happening so fast. And the information overload also happened fast, because it became a story that there's like a million angles to write about it from, and all those questions were being asked about live. So to me, it felt like one of those like really clear moments. I mean, I think someone described it as like a Twitter-induced bank run. It wasn't just people were removing money, they were talking about that, and that was leading more people. Just felt like the domino effect in a virtual, pretty remote friendly industry played a role there.
I would say,
Yeah,
oh, sorry, Kia, please.
Go for it.
Okay, I was just gonna, I agree with what Natasha said, but I would just say, I don't think that Twitter necessarily caused the bank run, but I think it accelerated it. I think, more devastating was like the founder email group that Andreessen Horowitz has with zillions of founders, where like they were all reaching that consensus behind the scenes. And I think there was asymmetrical information where in a lot of group chats, this was already being decided by some big firms. But I think that then that filtering out onto Twitter kind of really sped things up in a way that, gosh, who knows what would have happened in 2008 if we had the same level of social media. So I do think that it sped things up. And then that also forced us as reporters to also speed things up, like hitting up sources over Twitter and being in a million group chats. And I feel like, we were all just chaotically talking to the same people or trying to find new people.
Yes.
Yeah, I totally agree with Alex. I think the question of Twitter is really interesting, right? Because it's like, what would this have looked like if Twitter didn't exist? Like if we didn't have this level of social media and scale of social media, and also like startup people are like extra very online, right? So it just adds another dimension to the velocity of it. But I do agree that like all the stuff that was all the communications behind the scene was the actual like kernel of it all. I do like one interesting conversation we had like internally on the business team was like someone pulled out like a document on like how to report on bank runs, because it is like a thing that the media has a role in, and like if you write the wrong headlines or the wrong articles, like you're playing a role in creating the catastrophe or making it worse or making it faster or whatever. And so like it's weird, in 2023 you have to consider social media, you have to consider what you do as digital journalists. It is like not a normal situation. It's not how like the bank runs of past eras happened. So yeah, it definitely was, the internet made things weird.
This is totally an aside, but what was the nature of that document? Like from what year was that? I imagine just like going to the vault and dusting off some like, piece of parchment paper or something.
I can look it up, but it was definitely like, I think it was much more modern sort of guidelines on like what to do as digital journalists, because it's different, right? Like pre-internet, you basically just had like, oh, every morning the newspapers comes out, so you have like that 24-hour cycle. And like you have TV, sure, but like it's a very different thing. So like I can pull it out and share later, but I didn't really read it because I was in Texas. But yeah, like it was a conversation we had to have internally of like, how do we not screw this up, basically.
I mean, it's a really interesting point I hadn't considered, and certainly should have. But just to kind of summarize your sense of how this all went down. So kind of my sense based on what you're saying is there's this public feed that everybody is kind of privy to via Twitter. If you're plugged into this industry, you're seeing it dominate that Twitter feed. You're seeing things get retweeted. You're catching the latest news, the panic, whatever. I think my sense, and I'm sure yours as well, is VC firms also sending these emails, also sending these texts, also reaching founders via, group chats or whatever. I was with somebody on Thursday night who got one of these. which was pretty late in the game. They were like, thanks for adding value. But it felt like there were those kind of private channels and then that public channel. Is that about right?
Yeah, I mean, we wrote a story about a memo. There was a working group that formed Thursday night, Friday morning of a bunch of Silicon Valley insiders, including Gary Tan from Y Combinator and some other VCs and some economists. Noah Smith of No Opinion joined, and they were, this was a WhatsApp group where all these people were basically sharing information. And then on Saturday, they shifted to lobbying efforts, and they were trying to put together, a memo to share with policymakers on basically why the bank needed to have its deposits protected in their point of view. And why I spent time writing that article and trying to get my hands on the chat logs was I found it fascinating that you had this sort of very public Twitter stuff happening, but by Saturday, that's like Jason Calacanis tweeting in all caps that the world is ending and everyone should buy guns. And then behind the scenes, you had these like WhatsApp groups where people with arguably more power in Silicon Valley were trying to influence other powerful people. So that dichotomy was really interesting to me. And that was one direction I took my reporting pretty fast, because I was like, I just did not want to quote, any of the all caps tweets more than I had to, or give them more credit than they deserved. Because one other thing I would want to say is we can look for antecedents to this, people who are doing threads on how SVB was screwed and stuff. But the reality is there are a million threads like that. Every crypto company has a million threads on how it's a house of cards. And some of them may be and some may not. But people are trying to get clout so hard on the internet, especially on Twitter, that they're doing these like pseudo investigative threads on stuff that, you look great if you're proven right later, but no one really, cares if you're wrong. So I just think like, let's not give too much credit to the sort of, people who are crying the world was going to end, because unfortunately that's become like a whole influencer, tactic in my mind.
Yeah.
Totally. Like I feel like the people who say the spiciest things on Twitter can be really distracting for reporters. It's something I struggle with a ton, because especially over the weekend where all of us were online, you had nothing to do other than think about the ramifications and what could happen come Monday. And so, there was obviously news that broke during that time that we wrote, but it felt like there was a lot of also just like, doom scrolling and doom tweeting that happened during that time. And so while maybe the question on Thursday was, let's not make sure we contribute to a bank run, the question on like kind of Saturday and Sunday before the Feds kind of brought in a solution is, let's not just like re-amplify the same stress before it's like real. Which, I mean, I just wasn't prepared to be having that conversation at all. So it was kind of a really like difficult thing. And very like, I don't know, I feel like our editor-in-chief always says, spend less time on Twitter, because like that's a lot of journalists like over-index on Twitter. And I feel like it was great to have it, but I was also kind of a learning lesson to not like use it as my only sourcing engine.
Yeah, those are all great points. And I feel like we're kind of getting into one of the questions I had, which is how you all viewed your role and how you and your organizations tried to shape coverage in a way that did not worsen the situation and also did not amplify voices and narratives that were either unhelpful or maybe not, totally accurate. What was the approach there? Because all of this was happening so fast. You have things flying around you in terms of Twitter that can or cannot be verified. You have sources that you're talking to that I'm sure are very stressed and harried. So I'm curious to hear about things like what Kia mentioned in terms of those guidelines and how to report on a bank run, and also just, how those were applied and how you kind of tactically went about covering this, given all of the considerations. So Kia, I know you started us off with that guideline, but I'd love to hear, maybe we can start with you and then go back to Natasha and Alex for anything they'd like to add.
Yeah, I mean, it was so weird. Like, as I mentioned, I'd just gotten to South by and I had like kind of a sort of busy schedule. So I knew my ability to be useful to my team was greatly diminished. But like my first thought, it was funny because on Thursday in the daytime, I was still thinking, I have this newsletter that publishes on Saturday mornings, and we put it to bed on Friday afternoons. And so Thursday, this is all kind of melting down. And in the daytime, I'm still thinking like, oh yeah, I'm going to stick with my like AI like concept for this week's newsletter. By Thursday night, I was like, oh no, this is the story this week. And I'm going to look like an idiot if I pretend like it's not happening. So like I spent all of Friday just like rewriting my entire newsletter. But I'm also thinking like, this is something that like, this is moving so fast. Like literally new stuff is happening every like 20 minutes. And I need to have something that will hold for like 24 hours. So I just decided like, you know what? I'm going to write a nice little history, a profile of SVB. Like this is timeless stuff. The facts will not change between now and tomorrow. And I'm just going to do that. I also handily had that recording of like Greg's interview with Kate from Upfront. So I pulled I transcribed like the portions where he addressed the issues with like the bond portfolio, and I was like, people are going to want to read what he said literally a week ago. So I just kind of had to come up with this like thing that will hold but will still be interesting in the moment. And then at the same time, just like, I had one of my colleagues was like chasing like a tip that he had gotten about like something that happened internally or whatever. And so I was like trying to text people that I knew like at SVB or whatever to help maybe like confirm the stories. I was kind of like juggling like all the trickle of stuff that was happening, minute by minute, hour by hour, and then also like fulfilling my sort of editorial duties. Yeah, that was sort of like the first couple days. And then the weekend was just this weird, like, banks are closed, nothing's happening, but everyone is panicking because they need a plan B come Monday morning because we don't know what's happening come Monday morning. So that was like the phase of like the thousands of stories about like this entrepreneur is doing this to ensure they can make payroll on Tuesday. Like it was like literally the weekend of that. So we all kind of did a bunch of that, trying to figure out what will happen because nobody had any idea if like the Fed or anyone was going to announce anything before Monday morning. Although it was also the weekend of writing many pre-writes and kind of being like scenario planning, like they might announce this, they might announce a buyer, they might announce like all kinds of stuff. So we probably had like 5 pre-writes just on the ready because you just, and it's also the weekend, right? And like we're trying to also be work-life balance, but also all hands on deck. So we were trying to be strategic, have a lot of pre-writes, everybody like follow whatever angles, are making sense for them. So yeah, that was like our strategy there.
Natasha, how about you? Because I was looking through some of your coverage and it seems like you spoke to everybody. Like I don't know, I feel like there were like 20 sources in one article. So I'd love to hear about how you approached it.
Yeah, I feel like, the good thing about like all of us being so obsessed with the intersection of venture capital and startups was like literally everyone could be a source that week. So it was very easy to get people to say things in terms of focus. I knew that there would be a story that everyone would be working on about like how competition is going to be impacted. And I didn't want it to be a story about how competition is just going to see a soar in accounts. And so I tried talking to startups. Like one startup came out of stealth, through the story that I wrote because, just because his lead investor recommended them as a potential to go to next without SVB. And I tried kind of prioritizing like, there was a clear tension in the story, but prioritizing like how it's not just an opportunity for a ton of new customers, but also like very difficult. And I still feel like we're seeing that seesaw of like people who went and then left again, and maybe you're coming back play out. So I'm proud of that story. Also, TC has its roots in, blog culture. And so I think we had a really good opportunity to just kind of do a lot of snapshots, like quick and dirty pieces about how founders are reacting to the crash, timeline pieces. That felt like not necessarily like the massive feature, but more like, how do I get this information to a lot of people fast? And then, yeah, I think over the weekend, it was very much like I was trying to get people to tell me, things before they tweeted them, but that is much harder in such a frantic pace. And so the next best option was kind of just trying to send sources I had talked to on Wednesday and kind of just talk to the same 10 people every day. for like the next 10 days to hear how those mindsets change versus trying to constantly get new people. And that to me somehow helped me have more clarity on what was actually happening. Because like you said, I think a lot of people came in with like incentives or at least like, you know, a lot of frenzy. So it didn't always help to have a net new conversation when like, let's say depositors were announced that they would be fully protected. So, I mean, I still feel like there's a million things I could have done better. Like, for example, very jealous of Alex's piece on the payroll story. I was like, ah, that's so good. Because yeah, Alex, you should talk about that because I thought that was a really good, like, wait and see what actually happens approach.
Yeah, so I mean, to jump in there, I think anyone who likes like inside baseball with media can really see a lot of interesting stuff in a moment like this, because it, to me, it's sort of like a talent show where we all have to like go to our talent. Like Natasha, I think, tweeted by Sunday night, she'd written something like 14 articles. It was something insane. And he had already published like this thoughtful newsletter on Saturday. And like Axios had already done 1 million like short, quick hits, like super fast, but was also getting into stuff like payroll. Like I remember Dan and I, it's also like a very wonderfully collaborative moment where like everyone is kind of talking to the same people and we are trying to find our own like center of gravity. And so like Friday afternoon with zero PR authorization or planning, Dan and I just like did a Twitter Spaces, which was like super fun. And we had over 1,000 people listening, and we were just riffing on Friday afternoon about the story so far and what was going to come next. Like we'd both just published an article and like had like, you know, a couple of hours to like catch our breath and think what we were going to do next. And it was actually fascinating because we were both gravitating towards payroll there. Axios did a bunch of stuff like way faster than I could. I moved quickly from like after my first couple articles to trying to find these second day, like tough to crack, you know, 20+ call angles, just because it's the only way I can keep up with Kia and Natasha and Kate and Dan and all these amazing reporters. Like I'm not that fast. That's not kind of like my archaeological, you know, mindset. So like I published 2 pieces the week after that were harder than the quick hit stuff I did. Maybe less adrenaline, but like were definitely tougher. And that was where I saw myself adding value, like helping advance the conversation, was to kind of hit these angles that I just hoped and prayed that nobody had gotten to yet or was going to get to. So yeah.
Right. So for you, Alex, it was more of a, I don't know, what they like sort of a second day story, even though
the classic second day or analysis or my team makes fun of me. I tried to coin a term at Forbes, the retroactive scooplet. They said that's not a thing.
I love that.
My memo piece, for example, like the memo had already worked or not by the time the FDIC, you know, and everything went down with the deposits on Sunday night. But I was like, if I could get the chat log on this memo, that's an interesting snapshot of how Silicon Valley does this stuff. And maybe people have already moved on. Like Teddy Schleifer from Puck was like, oh, nice job on the memo piece. Saw that, moved on to something else. And I was like, thank God. You know? And similarly with the payroll thing, Dan and Kia's team were all over that. And I think a lot of people were all over payroll. But I just had this like question where I was like, I wonder which VC firms were actually prepared to like walk the walk there, because everybody announced they would do stuff, and then a lot of them were praying that it wouldn't actually be necessary. So for me, it was just like, oh, let's do a little scorekeeping, which is not as, you know, exciting as a new scoop, but could be like something that I could realistically do without Kate writing 3 scoops on the same thing. So yeah.
Just to piggyback on that, which is an excellent point, like a lot of what ends up happening is we all read each other's stuff, and other articles like raise questions in our mind, right?
Mm-hmm.
Like you read a story about like whatever something payroll, and then Alex is like, now my question is, who is actually going to do something about it, right? And then you start making the phone calls, or you read a story about, oh yeah, like the CEO like had this call with customers and said X, Y, and Z, and then you're like, is that really what you know what I mean? Like you just like you read everyone's stuff, and then that raises more questions, and then you go ask questions you go ask people to answer those questions, and that's your next story. So there's a lot of that going on as well.
And if you're not the New York Times, you can even link and cite your peers at other publications. Share the love.
I'm glad we got a New York Times dig in. So that was all very, very helpful. So thank you for going through all of that, each of you. My impression is, so I know the weekend was crazy and, you're trying to balance whatever weekend plans you have with staying on top of the story and kind of fulfilling your editorial responsibilities. The interesting thing was, I was kind of glued to my phone as I was going about my weekend. And then all of a sudden on Sunday, all of these plans, everything that people were scrambling to get together in order to kind of save the ecosystem, kind of moot, like federal government steps in, all of the deposits are going to be backed. Everyone breathes a sigh of relief, I imagine. What was your, I guess, sort of, come Monday, given that that was the ultimate solution, what in your view was kind of the enduring impact of all of this? So people got paid, a storied institution exists in some capacity, but TBD in terms of exactly what. It seems like a lot of channels and sort of, networks of trust that maybe previously existed in the startup and tech and Silicon Valley community rearranged or who knows what. I'm just curious about kind of what it looks like now and how that compares to what it could have looked like and that sort of thing. So realize there's a lot in that question. But Alex, because you look so thoughtful, I'm going to go to you if that's okay.
Okay. I'll try to keep it. I'm going to focus on one thing because I think you could take that in a lot of directions. So for me, from a story standpoint, basically, I shifted to a couple ongoing questions, which Fortune this morning in term sheet, Jessica Matthews kind of talked about SVB Capital. So my last piece or most recent piece on SVB has been about what happens to their venture assets because they had LP stakes in a lot of the top VC firms, and those do not go up for sale very often. So that was really interesting to me. But we're going to see more stuff on what happens to their investments in startups. There's going to be ongoing questions there. But I think from a zoomed out standpoint, where I wouldn't necessarily write one thing, but I hope we all debate it. For me, it was the absence of leadership. And we saw a bunch of people kind of address this in different ways or talk about it on podcasts or whatever. But I think, we didn't see clear, coherent leadership in the tech world during this crisis. And it's like, okay, maybe the crisis is contained and we can all move on, but that should be embarrassing for everybody. And also, like, who was the voice of reason, who was also charismatic enough to kind of carry the day in that moment? Obviously, the fact that there was a bank run, you could argue there really wasn't one. And so I hope the ongoing conversation is around the fact that the loudest voices in the room in the crisis were not necessarily productive ones. And then us as reporters are kind of just doing our best to throw some perspective into the mix. But the reality is we're not really changing history in that moment. It's, it's the people with the huge Twitter accounts who probably are doing more to affect history than we are. And so I think the fact that those were not necessarily the people the industry likes to think they would promote or would want to be their leaders should be something that we talk about more.
That's really
I guess
interesting.
I guess I like, to me, one thing that like continues to fascinate me is like what SVB was such a unique bank, right? And everyone kind of agrees on that, like just the way that they enmeshed into the business, like their like original purpose of being, all the stuff that they've been doing, like mortgages for startup founders, like all that kind of stuff, right? So it's kind of like what was its like fatal flaw, right? Like was it just bad at running a bank? Like did it kind of get too far into, it's been reported ad nauseum that they lobbied against or in favor of like relaxing some of the banking rules that applied to banks of that size. But then it had that like terrible investment decision around the bond portfolio and somehow didn't predict the interest rates. And so it's just kind of like, was it just bad at running a bank? What were all the things that it was doing to be so startup friendly, like just ultimately just bad business? like the contagion question was kind of going on for a couple weeks, and then Credit Suisse decided it wanted to remind everyone that it's a it's a messed up bank with like 100-year-old problems and also sell itself. Like all of these questions, like what went wrong? What was really the problem at the end of the day? And I don't know that we know that yet, right? Yeah, that's just kind of the question that like it's still stuck in me.
It's a good point. So what I'm hearing is kind of, was this just a coincidence? You know, was this a bad decision by somebody high up at the firm and could happen to any bank, even though it was, as I understand it, like pretty egregious? Or is there something kind of intrinsic about what this bank is and was and its connection to the space that almost made that destiny? You know, it was never going to work when some confluence of, you know, economic headwinds faced it, that kind of thing. So I'm not taking a side in that, but I think I had not considered that as kind of a question that this whole thing has raised, which obviously, depending on what side you land on in terms of the answer, has implications in terms of the broader, you know, quote unquote ecosystem, and probably some implications in terms of your question, Alex, about leadership and maybe lack thereof and that sort of thing. Natasha, what's your take on all of this?
Yeah, as you were saying that, I'm thinking about how like at one point I kind of said out loud, I was like, okay, like this is not a rational finance story. Like this is clearly a lot more complicated. And a lot of people responded being like, finance is never rational. And I feel like that was like the big takeaway for me, which was I kept feeling like I was hearing arguments from people as to why they didn't have to move their money or why they, you know, whatever, why alternatives weren't better. But like at some point, like the arguments on both sides like didn't really matter anymore. And so I really agree with you, Alex, where I feel like it was just this question of like a culture question. And I think a lot of people walked away taking VC and startups more seriously in some ways, like regulatory wise, but not as seriously in not understanding how financial systems work. And so I don't know what that means, other than people paying a lot more attention to it. I was often asked to explain why this impacts more than rich people. And just having to explain that felt like something I don't do on a day-to-day basis, because I thought everyone knew that payroll would be a conversation, but that's new. The only other impact that hasn't yet been mentioned, I think, is trust people have in fintech startups. Like going back to that competition piece, a lot of people were enjoying, I think Brex tried to raise $1 billion over a weekend, trying to help people kind of make payroll. And there were some really valiant efforts, no doubt. But the bigger question, even though there's good news for them, everyone trying to diversify their money, is will anyone ever really recommend a startup for their bank if an institution was still able to fall? Like I feel like if I was Brex or Ramp or all these different companies, that seems like a massive question ahead. One that I'm on about.
Really good point. So I want to make a quick announcement in that we are going to move into kind of the audience Q&A portion of this panel. So folks in the audience, if you have not seen the little Q&A like bubble thing at the bottom of your screen, that is where you can input some questions. So we're going to start with Justin Wolz's question, which straightforward, but I think a very good one. What was the most surprising thing to you about this whole saga? And Alex, I knew you talked about lack of leadership, but I'm going to go back to you and just see if there's anything else that was really, you know, surprising in that sense.
Yeah, I mean, I think if you, it's kind of adjacent to the leadership question, which is, I was surprised how surprised tech people were at their own unpopularity. Like, as you had Republican leaders like Ron DeSantis, and you had also left leaders both saying, don't help this bank, don't help the tech people. I think that was really shocking to a lot of entrepreneurs, VCs, kind of tech types, that, gosh, maybe the bipartisan common ground here is that people don't like us. I was a little amazed at just how blindsided people were. And you were seeing tweets go viral of people being like, the takeaway here is we founders have to batten down the hatches. Nobody gets us. Nobody knows what we're going through. Like, no, like they're very obvious reasons why the messaging hasn't been resonating. And so I think that reckoning kind of was surprising to me. The read the room kind of vibe. And I think, several people even had to delete their tweets because they started to get ratioed really hard. But yeah, that to me was just sort of like, where have you guys been?
It's a great point because this is not a new thing. Like I remember being at a dinner in San Francisco in like 2018 and the discussion was around this. And I was telling people, like, look at the polling. You are unpopular in a bipartisan sense. Like, you are the new Wall Street. It is like very clear if you pay attention to this. And I got fact checked on like somebody pulled out their phone. It was a Bloomberg reporter because nobody believed me. And this is not something that should have been shocking to anybody in that community, but clearly I think it's easy to get involved in your own, day-to-day, your own scene, your own bubble. So I that certainly rings true to me. But Kia, how about you?
Again, that it failed. It's wild that happened, and that's an event that because I was like 18, barely, not even, like, when the 2008 thing happened. So like, this is insane that we got to cover this just months after the FTX meltdown. Like, this is wild. And like, again, right, like Signature and Silvergate all happening at the same time. And the other thing that shocked me relatedly is that this is the second biggest bank failure ever and the largest bank run, like in terms of withdrawal. Like we know that SVB was like an institution in like the startup world, but I guess like I always remind people that venture capital is actually, numbers wise, a very tiny asset class. And so I just kind of like assumed subconsciously that SVB was also a tiny bank, and it's really not. Like, it really, really wasn't.
I didn't realize the scale of it until just now. So that is immediately surprising to me. Natasha, how about you?
I think just seeing the way people reacted to the information in real time, like it was just a jarring time to be a journalist, to be in tech. I don't know. You almost would think that there was like a better way to ask for advice or to express what you're doing with your company or with your portfolio companies. But it just felt so informal and so kind of chaotic. And I just feel like I've never experienced anything like that in my life, and probably never will. I mean, I don't know. Yeah, it feels like that was very once in a lifetime.
Yeah, so I want to get to a question by Catherine Harris here, and I'm going to sort of translate it. Well, I'll just read it. So she asks, to what degree do you think behavioral risk, essentially meaning customer behavior, now needs to be analyzed by banks going forward? And I think it's a really good question because it alludes to everything that we talked about in terms of the Twitter dynamics, the VC emails, whatever. But clearly there's kind of a new pattern for bank runs. You can have kind of a viral bank run, it seems like. And I realize you all are not necessarily financial or banking reporters, but is there anything that you have explored, over the course of the past month or so that or thought about in terms of how banks and financial institutions are reacting to this new possibility?
I think First Republic put out like a ton of guidance or statements as things started to melt with SVB. And, I think, there's so many jokes about how I've never seen people be so loyal to banks, but I think over communication, at least for that period of time, felt new and maybe something that will stick. But yeah, beyond that, I don't know enough about it to know what they could change.
Yeah, the FBR thing has been fascinating to watch because they're like rumors about them started circulating as soon as the SVB meltdown started. So it was interesting to watch that sort of like second order effect. And yeah, you're right. They were like putting out statements and their inflows and all that. They were just like, we have money, do not pull out your money. I mean, one of the interesting things, right? Like, you've seen the reactions from startup customers. A lot of people were like, I put my money in JPM and I'm never again going to anything smaller than that. Like, this is where I live. major bank that is too big to fail, like by government, like, pronouncement. And then you have the entire and completely different mindset that's been like diversification. You now have like startups coming out, like Brex and a bunch of them are coming out with like automatic, we send your money across like 10 to 12 banks. So you have that mentality now. And so I feel like, yeah, you're seeing just like a new era of banking, of like just ways of approaching that. Like a lot of founders probably never thought that that was a thing they needed to manage. They were just like, oh yeah, I'm going to get a bank account. I get a bank account. Cool. Awesome. I pay things with it. And then now they have to have strategies. Like it's a whole new era that people just didn't consider.
Right. Corporate treasury is now a thing.
Yeah.
Alex, anything you wanted to add?
I think that was well said. I can take the next one.
Cool. So I this isn't an audience question. This is sort of a me question. What are you all working on now in terms of the Silicon Valley Bank story, or have you moved on, and do you expect to be writing, stories about the company or kind of related crises, First Republic, that sort of thing going forward? So Alex, maybe we'll start with you, if that's okay.
Yeah. So I mentioned that my most recent story was about SVB Capital. And I think as there's news there, I would probably look for angles. But again, like, part of the challenge of my job is to not try to write the same thing as everybody else, for better and worse. And so I think, it's possible that story moves too fast again, or is too well covered by my peers here for me to even bite at it. We'll see. I think one thing that is going to be tough for me is, we have the Midas list in a few weeks in early May, and to be putting out a list about venture capitalists based on their returns, it's just going to be a very interesting year for the Midas list. Valuations are down. A lot of VCs have not covered themselves in glory recently. It is a numbers driven list. So we were joking that we should just have nobody be number one this year, but somebody will be number one. And so that's something that I have to kind of wrap my head around, is how to thoughtfully write about that list in the next few weeks.
I'm really interested in seeing that, because it did not occur to me kind of the needle you all are threading in terms of current dynamics, and also with this in the recent rearview mirror, in terms of that list. So yeah, I don't envy you, but I'm excited to read it. Natasha, how about you?
Yeah, I mean, I feel like with SVB, I'm still like talking to a handful of sources every few days, but I'm kind of also in a spot where I'm like, I think everyone wrote a really good second day story and weekend story. I don't know what the 1 month later story is yet. And I think I'm still thinking about the employees too. And so waiting to see what's happening there is top of mind for me. I cover a lot of, like I said, emerging fund managers. And for them, I think this impacts them disproportionately. Just any people knowing that there's fragility in the ecosystem. A lot of people are not going back to venture, especially on the LP side. So I'm trying to cover that tension. I think SVB basically now is a question I ask during interviews versus the story, at least for like, in between anything big happens.
Makes a lot of sense. Kia, anything on your radar?
I guess there's a couple of things. One is sort of what happens to SVB Capital, SVB Securities, SVB Financial Group, just sort of all of these pieces of what used to be sort of the parent company that are still kind of flailing about. So TBD on what happens to that. I guess we'll be like monitoring the situation. And then the other thing that I'm interested in is, SVB Commercial and Private Bank got bought by First Citizens, which is actually a fascinating bank. I wrote like a little profile of them and learned a whole lot in the process of it. And like, yeah, like what happens to SVB now under under that umbrella? Because on the one hand, First Citizens is very experienced in purchasing distressed bank assets from the FDIC. They bought like, I think over 30 in recent years even. So it's like, on the one hand, it's like kind of interesting because they're experienced in this type of thing, and it's a stable bank, and it's a large regional bank, and they've been trying to make inroads with like the North Carolina triangle, sort of tech scene over there. And on the other hand, they're so different from SVB, like in their history and their culture. They're way more conservative, like not in like a social sense, but just sort of in a how they run a business. And so, but they really want to be part of Silicon Valley, the industry. And so, you know, some people are not convinced it's going to be a a new situation that works out. And some people have hope about it. But yeah, like I'm just really curious to see what that looks like, what this new, blended family looks like.
Yeah, you have given us the perfect note to end on. So, it's TBD in terms of Silicon Valley Bank and First Citizens, and how that all plays out, and what its role looks like going forward. And, I hope that it remains as important and helpful as it once was. But we are 1 minute past 6 here. You all have been incredibly generous with your time. And I'm sure there are Slacks and emails flying around. So Natasha, Alex, Kia, thank you all very much for everything this evening, and we hope to talk to you soon. And audience members, thank you as always for coming. And we'll have a recording of this up in the next couple of days, and we'll be sure to let you know as soon as we do. So thanks, everybody.
Thanks so much.
Thank you, everyone.
Bye, everyone.